Hey, this is Jay Soloff from Investors Alley, and we are looking at our options trade of the week. So today I am in Market Chameleon, marketchameleon.com, an options analytical tool and website, and I'm looking at Microsoft, the world's biggest company, which has currently got a market cap of 1.1 trillion. So despite the stock market being volatile and selling off somewhat, Microsoft is still worth over $1 trillion and currently trading about $138. So I always like to see, with something as big as Microsoft, what kind of trades we might be looking at. What are the kind of big trades going on? What might be interesting? So I'm going to this key trades to kind of look at some of the bigger stuff. We got some put spreads and some calls and all different kinds of stuff. So I like buy rights because I think that they can be a bullish sign, because you have to buy the stock, and you have the risk when you're buying a lot of stock and selling a call against it. It's definitely a bullish trade. So you have the risk. Obviously, if the stock drops, you lose money on the stock. You can lose a lot more money on the stock than on the calls you're selling. So it is a bullish trade, and particularly when you do an option that's pretty far out of the money, like this 150 call. Now this is January of next year, so there are a few months. But still, 150 call versus shares, this is done 1,500 times. So 150,000 shares versus 1,500 calls sold at 150 is certainly a bullish trade. So despite the market action and the volatility and some relatively steep selling days, Microsoft still seems to have some some bullish interest, and particularly in the terms of relatively safe sort of trades like covered calls. So once again, this was 1,500 calls sold for $3.25. That brings in almost $500,000 in premium. That means also that 325 minus 137.78. So that gives us roughly 134.50. That's the protection. This gives protection down to 134.50. So it does have that safety aspect to it. Meanwhile, this is money that is collected if the stock just sits there and does nothing. That 325 is collected, 500,000 collected. That's probably around, it's about a 2% yield in the course of about 4 months, which is not bad. You think about that, annualized, it's about 6%. The dividend yield on the stock is something like 1%. So you're holding it, and you have the ability to add another 6% over the year on top of your 1% dividend yield. So not a bad play to get some yield while you're holding the stock. Meanwhile, it does give room from 137, all the way up for this was done again, close to 138. So a whole another $12 up to 150 before you're capped out on gains. So you can make almost 10% on the way up, plus that yield on this trade. So sort of trade that I like to do. I might do a shorter term trade, maybe do October or September, and just keep doing one per month. You might be able to get a little bit more bang for your buck. But if you have a lot of shares and you don't want to have to do a lot of management, doing something like this 4 months out, good way to increase your yield, still give you exposure to the upside while also protecting your downside to some extent. So this sort of thing I talk about quite a bit in my option trading mastery course. If you want to take a look, there's a link on the screen that I have a whole unit on covered calls and 10 other units beyond that. So something, if you're interested in that sort of thing, be sure to give it a look.